Hi, everybody. This is Paul Lang from Disciplined Trading Strategies. I hope you're all set for a fun 90 minutes. I normally try to keep these to 60 minutes, but this was kind of advertised as an anniversary special. Believe it or not, it was just about a year ago, it was third week in August, that I opened the first day in the DTS trading room and the first DTS market letter went out. Doesn't seem like it. I don't make a big deal about those things, but I thought, hey, wouldn't it be a neat idea to kind of take the highlights of the events I've done over the last year and kind of put them together as a little special event. So I had originally targeted this as being a little presentation I did before because it's very popular to just discuss the 3 best and 1 worst trades from the last trading week. And I thought, hey, why don't we make it an extra 30 minutes? And it may not be 90 minutes because typically the regular event that was scheduled for tonight, just the 3 best, 1 worst trades, usually doesn't take an hour. So I tacked on 30 minutes in the beginning here. We'll review what I think are some highlights and summaries of the best from the last year, at least in hindsight, anyhow. Yes, Sam, this should be recorded as long as something doesn't get messed up along the way. I always caution people that, there have been times where there have been little technical errors, but it should be recorded. And on the free stuff page, tomorrow or next day sometime, whenever, okay? I don't mail them out, Don, but you can always check the free stuff page, which I'll actually review that whole concept in just a minute. So I always like to start on time for all of you that are here on time, but let me just start with a little kind of mini funny story here. Not really funny, just something to pass the time for a minute. Some of the people in the DTS trading room are they got an extra preview of my opening comments tonight because I left the mic on when I was in the room, and it was in the afternoon and I was just babysitting a trade, so I started to make some notes for tonight. And I dictate everything I do these days. I don't type a whole lot, so I'm dictating with Dragon, and I check, every few minutes I look at the room to see if somebody has a question or what's going on. And there's all these people typing, what are they all, what's all the excitement? And they're all typing, hey, Paul, you left your mic on. So everything I was dictating, I was saying to the room, and I thought, boy, that could have really been a problem if I wasn't just happened to be dictating notes for tonight. So they got a little preview of these opening comments here. I thought it was kind of funny. That could be something I could really get in trouble with one of these days. You have to really make sure the old mic is off there, or it could lead to problems. So anyways, I got kind of excited about this presentation. I thought it is, for those of you that are going to be here and listening to it, I thought it's really a great summary of some key concepts and a way to put them all together into one night. And I kind of really got into it last night. I keep different schedules. Sometimes I get up early, sometimes I stay up late. And I kind of really got into it last night and stayed up late and just cranked all these slides out. I also thought this afternoon would be prime time for trading, so I didn't want to leave anything go until this afternoon, so I did it all last night and then when we get to the trades, they're going to be based on it's really going to be the last 4 trading days I went to. So it was Monday and Tuesday of this week, and then last week I took a 4-day holiday, so my last 2 trading days were Tuesday and Wednesday of last week. So it'll be the 3 best and 1 worst trades from those 4 days. Ironically, today definitely had the worst trade, so I'll if we have time, I'll just kind of show you what it was, because I was actually stretching a little bit, because really for a couple weeks I haven't had what I would call a bad trade. Like, I have trades that stop out, of course, but that doesn't make them bad. Today I did a bad trade, actually. So I'll show that to you, but it's not in the slides because it happened just this afternoon and I couldn't throw it in there. So welcome to tonight's event. I've come to realize as I went through the highlights of some of the events that I've done and put them together, I've come to realize something that I should probably say to some of you. Some of you kind of know me, some of you know me, some of you are fairly new. But when you listen to the stuff I say, I've come to realize that a lot of what I say is almost in contradiction to a lot of what you probably have heard or have been taught, or what you hear if you read, just a typical free trading manual or something. Some of you agree with that? I talk about to me it's what you need to do, but for some people, if you're listening to me the first time, it may be, this guy's off his rocker. What's he talking about, right? Hey, Taz girl. But it's not that I'm off my rocker, it's that there is a little bit more to understanding this than what most people present. And it's not just as simple as blah, blah, blah. It's not complicated, but the truth of it is that a lot of things I think are said because they're easy to say, they sound good, they sound like what you want to hear, but some of this stuff is just wrong. It's just dead wrong. It's crazy wrong. And a couple of things I'll be talking about tonight, I won't get into them now because I'm going to get into them as we get into our initial topics. So here's what we're going to do tonight. Introductory comments from Paul. That's what I'm doing. That's what I'm doing right now. And then for a half hour, we're going to highlight my three favorite or / most important topics from the events that I did over the last year. In hindsight, the ones that I feel now are the most important as I look back on them. And then from 5:40 to 6:30, the three best and one worst trades from the last week. So as I was saying, if you've been around for a while and you're feeling frustration sometimes in your trading because things just don't seem to work right, you may really start to glob on to what I'm saying because it may start to make sense. And some of you that have been around for a while and have begun to figure some things out, when I say these things, it may be just what you need to hear. In other words, have you ever had the case where you thought something to be true and it was in the back of your mind and you thought, yeah, and then somebody says it right to your face and you go, yeah, I knew that. That's what I thought. And it's kind of what I think where some of you may be. You need to hear some of this stuff. Like an example. I'll give you an example now. I'm going to talk about it more later, but I didn't used to say this years ago because working at another company it was forbidden. But the truth of it is, trading, investing, you should equate to playing a video game more than you should to in-depth research and listening to news. What do you think about that comment? You agree? Does that shock you? Do you want to click off right now and leave the webinar because you think I'm a nut job? But it is. I mean, and the sooner you begin to think that, and the sooner you begin to think that way, the sooner you will get rid of a lot of the false notions that you have that you're hanging on to that only cloud your judgment and only make it more difficult. You will come to that if you forge through and you come out the other side successful, you're going to realize this. So I'm just trying to speed up the process a little bit, right? Yeah, whatever you want to look at, but that's what it is. And I have said for as many years as I've been on a microphone, minus maybe 3 months, I've said I think the best way that you can trade, and when I say trade, I'm talking day trade or investing. Investing is long-term trading. I mean, that's the terminology I use. But even long-term trading, the best thing you can do is have a laptop computer on a deserted island, and your computer gets nothing but charts and your order entry platform. That would be the best thing that you could do, because everything else is either useless noise or confusing, conflicting noise. I'll give you some examples as we get into it tonight. But since I was saying some of the things I say are probably flying the contradiction of what you hear sometimes, I just want to throw that out there. You see, I get emails, and I'm on email lists just to see what people are saying out there, and I laugh at some of these things. It's like, you've got to be kidding me. But I think a lot of it is geared toward, sales, to make people think, gee, here's something you have to know, here's something you have to believe. By the way, there's a new string of emails coming out. Let me ask you something. If you could subscribe to the special market maker order book for $29 a month, do you think you'd make money from getting that? If somebody offered you, because there's something similar out now, but this is something from a few years back that it was all the rage. Do you think if somebody said, hey, you can subscribe to the market maker order book for $29 a month, do you think you're going to make money with that? Yeah, it would be like order flow. No, of course you're not. There's no subscription for $29 that's going to give you the inside information, the inside track that's going to beat the rest of the stock market. Of course not. All that stuff is silly, because now you're seeing all this stuff about, how to conquer the dark pools, and all of this is just noise. It's just noise. See, what matters is if you understand a chart, all of that stuff shows up on a chart. All of it. No matter, I don't care what the topic is, who's trading, who's cheating, who's under the covers, who's doing this, who's doing that. It all shows up in a chart. And that's what matters. What matters is when a buyer and a seller finally agree and put it on paper, boom, it hits the chart and that's it. And it really doesn't matter how it got there or where it got there or anything else. Now, I'm talking out for the vast 99.9% of you. It is true that if you have the sophistication and the money to be running a dark pool, or to be in some of these very, very special operations of super fast, high frequency trading machines. But these are $1 million operations. Those do rely on some of this weird stuff. But that's a whole different thing. That's a completely different thing. That's more of an understanding mechanics and engineering and high-speed computers more than it is about the stock market. I started saying years ago that stop losses may cost you money if you use them the wrong way. Please understand, I would never advocate not using stop losses, but the way most people use stop losses, if you look at it, I bet you, most of you, your stop losses cost you money. They don't save you money. They don't make you money. We might talk about that a little bit tonight. If you are using a strategy that has like a built-in entry, in other words, here's a daily chart and you buy over the high of a bar or something, you're losing money. It's almost impossible to make money with pre-canned type entry strategies. And when we get to the charts and the 3 best and 1 worst trades, you'll see what I mean a little bit. We'll talk more about that. So there's some introductory comments, and I think with this we're going to get going and start with the opening slides here. So here are the 3 that I picked for today. And I will give you plenty of opportunity to go find these yourself. Don't worry about writing these down or how to find them. When I go through the 3, I'll review where you can find them if you want to see the whole presentation. My 3 favorites were, the first one was from a presentation called From Chart Reader to Trader/Investor. I think this is my #1 favorite presentation. Now, understand something, that a presentation like that, it really is saying, once you kind of know the charts and you understand technical analysis, what are the things that prevent you from making money? I want to make it clear, I don't want to sit here and harp. I want to get all the information I can across to you, but there's an understanding we have to have that, to me, the only way you make money in the market is technical analysis. I used to be 100% technical, and then quite a few years back, I switched to being 110% technical. That was a little joke there, but 110% technical. And in order to make money, you have to understand the charts very, very well. But most of my presentations and lectures, because naturally to me, if you want to learn how to read charts, learn how to read them. But a lot of the problem comes after people know how to read charts. Even after they become good chart readers, they still lose money. For some of you who don't know me, when you get a chance, go to my homepage, disciplinedtradingstrategies.com, and scroll down to where it says warning and read all that. I think a lot of people have a difficult time learning for a whole variety of reasons. It is a very doable thing, but you have to do it the right way. So a lot of this, the presentations tonight that I'm going to review, and a lot of the ones that I've done over the year, a lot of them focus on, okay, you know how to read a chart, but you're still not making money. What are the problems? And this is, I think, the best presentation for that. It talks about a lot of the mistakes people make, even when they know how to read charts. Understand that reading charts, becoming a great chart reader, does not require great intelligence. And I always add this. I never say this to demean or embarrass anybody, but very simply, it's not rocket science. Understanding it is a method that you have to get to understand, but the sophistication level is not huge. But even after people learn that, there are factors that come into play that make it difficult to make money. So my favorite one from here that I'm going to talk about is an hour a day keeps the job away. An hour a day. Now, an hour is a risk unit. I'll talk about that in a minute. My second one I'm going to go over is from a presentation called Great Trading. And the topic here is going to be what knowledge is necessary to make money in the markets. That's kind of the feature of that presentation. But tonight I'm actually going to harp a little bit more on what is not needed and give you some examples that relate to what I just talked about a few minutes ago, news and things like that. And what makes a perfect setup under the 3 questions answered about technical analysis presentation that was fairly recent. Okay, so that's what we're going to go through. Let's start at the very first one here. Hopefully all this slide stuff worked out. I have to laugh because when I was with another company, we had a salesperson who had this great idea one day that if we did a presentation, the traders should not do any kind of PowerPoint slides because we're too busy all the time. We spend 90 hours a week trading and looking at stuff, and we just don't have time to make slides. And I always kind of chuckled at him, like, that's certainly not how I am. I try to get things very concise and limit my trading to part of a day. Not limit, but then do an extensive review and preparation, and keep it all to a very simple method when I'm all done. So here's number 1. An hour a day keeps the job away. This is from Chart Reader to Trader Investor. And the title slide here was this: the way you try to hit your goal may be wrong. Now, an R means a risk unit. It means the amount of money that you want to risk on a trade. It could be when you're starting out, it could be $1, it could be $10, it could be 50, 100, 500, 1,000, 2,000, however much money that you're saying, I'm going to, for lack of a better term, bet on this trade. If it doesn't work out, that's the money I'll lose. $500, let's say. Okay, that's what I'm going to lose. And something that I think has become a huge problem for a lot of people is how to make a living once you understand charts. And the point of this is that you should eventually be set up so that one risk unit a day is your goal for what to make. Now let me explain. People do this completely wrong. This is not something I really didn't realize till maybe, I don't know, a couple of years ago, 3 years ago, what a serious problem was. Most people start off with way too much risk money initially. In other words, if you hear my free seminar I do on Friday, is coming up in a couple of weeks, but on Friday, the first part of Mastering Technical Analysis I do for everybody, the introductory part. And I talk in there about the process you should go through to learn to trade. And in there, I'm very emphatic about a process that you start off paper trading, not long, but paper trade until you can prove you can make money on paper. And then you switch to $5 or $10 risk. And that's literally it. Nobody does that. And this is one of the biggest mistakes you can make. People basically start off at $100 or $200 risk, and then they move up to $100 or $200 risk. They don't really ever change. Does this sound familiar? Anybody? Everybody? Or at least do you understand the problem I'm talking about? That what should happen has to be the exact reverse of that. You should start off extremely small. Yes, I mean $5 or $10. Why? Because to become successful after you know the charts, it involves confidence. It involves being confident in what you do, and you can never build confidence when you have more money than you're comfortable with at risk. So you start off on paper. When you start making $1 million a day on paper, I'm exaggerating, but you know everybody cheats paper trading and they make money. Then you switch to $5, and you stick at $5 until you prove that you're making money. And of course, we mean making money gross, not net. Yes, your commissions will probably cost you more than the profit you make. Who cares? This is all a learning fee. It's all an expense. But if you're not successful in the beginning, do you want to be losing $500 a day or $20 a day? That's the question, because you probably will start off losing. I even tell people when they take the first seminar, I hope you do start off losing, because the best lessons are learned from starting off losing, not winning. So start off extremely small. But then the next problem comes when people do start off small. I think some people do that. But then what you have to do is you have to, once, and it's a very important caveat here, once you are trading well and once you have a consistent track record of making that amount of money, you know, more than one risk unit a day, whatever it is, and you don't have a problem with taking big hits or big stops, then you start moving up. But then you keep moving it up until you are risking the amount of money that makes you happy per day. In other words, if you want to make $500 a day, eventually you work up to the level where you're going to risk $500 a trade so that one successful trade makes you money. Because here's the problem that happens, right? What a lot of people say is, oh, they want to be conservative, right? They want to be cautious and careful. So what they do is they say, well, I'm just going to risk $100, right? But the problem is, if they want to make $8,000 a month to make a living, what happens? Well, what happens is they say, well, gee, I need $400 a day. I'm risking 100. I got to make 4, or I'm risking 200, whatever it is. I got to make 4 risk units a day, or whatever it is. In other words, by having too low of a risk amount, you're setting up a process by which you have to make a lot of risk units per day, and you just can't do that. It is relatively easy to make 1 risk unit a day, and if you have the confidence and the track record to prove you can risk the money to make your living from that, that's where you need to get to eventually. Now, again, this presentation, called From Chart Reader to Trader Investor, covers this in more detail, but that's the main point out of this that I think a lot of people need to get. There are too many people that become successful. They're up 1 or 2 risk units. They're up a risk unit, but they're only risking $150. They need more money, so they start pushing more trades, And as they pushed more trades, they started giving back their money. Does that make sense, everyone? While I'm waiting for that, Mimi, what I teach can be used on anything. I like to do stocks myself, and I do futures sometimes, but it's primarily for stocks. But understand, when you say stocks or options, it's not really a valid question. I mean, I trade stocks, but in order to trade options, you have to understand the stocks, right? You can't trade options in a vacuum. Options are derivatives. So if you want to trade options, you can do that. That's fine. But you need to understand where the stock is going, the underlying stock. There's no such thing as trading options in a vacuum. And yeah, parenthesis, yes, there is if you have a extremely sophisticated computerized delta neutral program. But even then, you want to still be understanding where the stock goes because it still helps you a lot. So you need to know stocks. That's what I focus on myself. But understanding chart patterns, it can apply to Forex, to stocks, to the market itself, whatever it is, okay? So there's number one. And again, that's just one highlight from that presentation. And in a minute, I'll refer you to how you can see the whole thing if you want to see it. Number two is going to be, it was a presentation called Great Trading, and it's what knowledge is necessary. And this slide here is kind of the title slide to that presentation. It goes through, I think, some great conversations. You know, is great trading a quest for perfect patterns? Well, I don't fault somebody who says that. It's possible you may have even heard me say that a long time in the past, but I don't think it is because, number one, I'm not sure there is such a thing as a perfect pattern. Number two, what is perfect would certainly be disagreed upon by several excellent traders. And number three, what if the perfect pattern shows up once a month? What do you do in the meantime? And I think the key line here that I want to get across to you is that, actually this is one of the topics I'll talk about later, but our job is really how to deal with the less than perfect patterns that we are presented with every day, right? Does that make sense to you guys too? Theoretically, you know, it's easy to sit back on a pedestal and just say, well, wait for perfect patterns. Well, okay, that's nice. But that's not the real world. The real world is you have to make decisions every day about what is perfect, what's not perfect, what's acceptable, and how do you make the most out of it. And if you try to live in that perfect world, you're just going to get hurt. Is trade trading about a great watch list? Well, watch lists are an essential component, I think, to being organized and to trading, day trading or swing trading properly. But I could give a beautiful watch list to somebody and there's no guarantee at all they'll make money from it. It's what you do with the watch list, the timing, the market timing, the entry timing, the type of entry you use, when you get in, your reward to risk, all kinds of stuff really revolves around what makes a great play. You could have a less than great setup and make a lot of money from it if you do it right. And is great trading a no-fail strategy? Well, here the key line I want you to get from this is, I'm going to read these two aloud because I think they are very helpful. The sooner you understand there's no such thing, then the sooner you'll be on your way to successful trading. There's no such thing as a no-fail strategy. There is no holy grail. There is no magic indicator. There is no magic anything. It's just a little bit of work is all it is. It's probabilities and work to find the best patterns. First, we get odds from great chart analysis. Then it is how you handle your winners and how you handle your losers that matters. That is what will define you as a trader. Now, what I want to go into here a little bit is a couple of slides that I just love because it's so true. What do we not need to understand? Well, here's what we don't need. We don't need to listen to the news. Let me give you a non-trading example. Do you guys remember? I don't know. It wasn't that long ago, 2 weeks, 3. And this has nothing to do with the current hurricane situation on the East Coast. But do you remember about 3 weeks ago? I'm guessing that there was a devastating hurricane coming for Honolulu, for Hawaii. Do you guys remember that? I mean, it was all over the news. This was all the thing. Do you remember this, right? And this is the worst ever going to hit, and it was going to, completely flatten the islands. What happened to that? What happened to that? And my talk is about news. It has nothing to do with hurricanes, to be sure. What happened to that hurricane? Anybody know? Does anybody know what happened to that hurricane? Do you even know if Hawaii had a hurricane hit? Are they in trouble? Do they need supplies? Yeah, right? It just went elsewhere, right? But my point is, it just went off the news the next day. In other words, nobody wants to hear about a non-hurricane, right? Well, you know what I mean? So it's on the news, 3-4 days. Wow, this is all I can talk about. And the next day, it's just gone. We're just talking about something else because there's nothing to talk about, right? I know what you mean, Cliff. I'm almost there with you myself. Well, it's the same thing in trading, right? Now, remember, this slide is from a presentation I did whenever I did it, so it was timely at the time. But there was this big news event this day. Remember when the administration started tariffs, right? You remember the tariff thing? Now, you may not remember this accurately because, it just kind of faded away because the market kept going up. But do you remember when the tariff came out? Can somebody back me up on this? That the initial days, that this was the end of the stock market, this was the end of our economy, this was the end of America, this was the end of everything, right? We cannot live in a tariff battle with other countries. Prices are going to skyrocket. Everything we buy is going to be 25% more, right? Some of you, the rest of you, right? And again, this is not a political conversation. I don't want any comments about politics or good or bad. My point is this, is that, let me show you the chart. Let me skip forward, I'll come back again. Here was the tariff announcement. It happened that morning. See that topping tail on that chart? That little pullback, that was the tariff crisis. That was it. That was it. Market didn't care. The pundits said this is the end of the stock market. Now again, the next day when nothing happened, nobody stands up and says, oh boy, did I have that wrong. Oh boy, it's forgotten. We're on the next story. As a matter of fact, what was kind of funny, here's the news, blah, blah, blah. Manufacturers, however, complained about rising prices of raw materials, especially for steel. The Trump administration in March announced the tariffs for steel and aluminum imports to protect domestic, blah, 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 blah. Now, what is funny is, guys, if the market would have dropped that day, what would the headline have been in the news? This is really an important point I want you guys to understand. And once you start paying attention to this, you're going to be blown away. If you don't already, many of you probably already get this. If the market would have dropped this day, what would have been the headline? What would have been the headline? If the market, when 10 o'clock in the morning, they announced this tariff situation, if the market would have had a huge red bar that day, the headlines would have been, right, U.S. trade war, tariffs, knock the stock market back, stock market reacts to huge tariff war, blah, 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 right? But the market rallied that day. Why? Did the news change? No, the news didn't change. And this is what is so hysterical and what gets people confused. What happens is at the end of the day, and this is literally what happens, at the end of the day, if the market's up, the news stories, the news, just the local news, the national news, business news, they scan the news stories to look for, if the market was up, they look for the bullish news that quote unquote caused it. The bullish news may be that Grandma Smith made it across the street successfully. That may be the most bullish thing out there, and that's all they have, right? And if the market drops that day, they'll scan the stories for the most bearish story, and that's the reason. That's the bearish story. It could have been a good news story out there, really good news, but the market dropped, and we'll ignore the good news story. And what's bad is that because the news presents it, always, tell me if I'm wrong, they always present it, here's why the market dropped today. It's because of this news story. This is what did it, right, everybody? This is why the market rallied today. It's because of this news story. This is what made the market rally, right? How many times have you heard the phrase, investors reacted to blah, 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 right? But that's not true. That's not what's happening. The market does what it does. And then the idiots on TV need a reason to justify it. So they say, oh, here's what it was. Now, what's even funnier about this one is that this day the market went up. And what was hysterical was they had nothing to hang their hats on. It was all bad news in the market that day. There was no good news, right, Taz Girl? There was no good news. So you know what they did was, they said that the reason the market went up on this Monday, because the job numbers from, I can't even say this without laughing, from last Friday were so good that it carried over into Monday. Can you believe this? This is really what was said. And of course, the job numbers being good, A month ago, that was considered bad because the job numbers are so good that now we have inflation, right? Job numbers are good. Yay, we're winning the employment thing. That's great. The market goes up. Oh, job numbers are too good. Oh, now we have inflation worries, so now the market's going to drop. Nobody has a clue, guys. This is all garbage. It's all garbage. I know people want to feel justified in trading by understanding the reasons of why things are happening, but you can't, and please don't. This is one of the most important messages I can get across to you. U.S. economy, I know you're going to close your ears if you don't want to hear this. It doesn't matter. The economy, the market does not follow the economy. It just simply doesn't. You cannot win that argument. Just look at the charts, look at prices, look what's happened. It doesn't happen. Actually, what happens is the economy actually follows the stock market. So if you're trying to look at economic news to make your trading decisions, you're always going to be worse than the tail wagging the dog. Now, I haven't really kept up with your comments here. Let me read them real quick. Right, they search, right, Rich, they search for news that fits the narrative. But what's bad is, Rich, to new people, they're told every night that this is why it happened. You know what I mean? And that's what I'm trying to get across, is that it's presented to you in such a way that you really believe that was the reason. Because it makes sense. Wow, the market went up, and oh my gosh, yeah, because they're talking about raising interest rates. Oh yeah, I get it. I got to follow interest rates now. That's the secret. You see what I'm saying? It's not the secret. It's just TV shows need to stay in business. And to stay in business, they need to provide a worthwhile feature. And their worthwhile feature is that we give you news and insight on the economy and insight on the news to help make you a better investor trader. But it doesn't. It just simply doesn't, period. The news is entertaining. Well, Andres, I like to listen to the news just like anybody would, just to hear what's going on in the world. But I think it's hysterical how they try to, justify the financial situation based on the news. Yeah, that's true. Yeah, and when I do that Friday half-day webinar, one of the things I talk about in there is a report out by economists where they're admitting they don't have a clue. They went nameless, and I have that article for you when we get to it. That's coming up. Tazgor lives it's all the supply and demand thing. When there is money that needs to be invested from around the world, from investors, from hedge funds, from institutions, when there is money sitting in the bank that needs to make more money, it goes into the market. And that's why it's hard to stop a bull market, because what needs to stop is a snowball effect that reverses it. Bull markets stop in 3 different ways. And the most common one, the one that has caused all the major collapses, is through irrational exuberance, not through bad news. There's never been a market crash that was a real crash on bad news, so to speak. Careful when I say that, but I mean the debacles, 1929, 2001, 2008, were all caused really from the huge rally in the market that led up to that. And then any spark, once you have a open pan of gasoline, any spark will light it. And if you have in a climactically extended entire stock market, all you need is that right spark, and you start the snowball down. And that's the easiest one actually to play, and the best one when you get it. Anyways, you follow the big guys on charts. You follow the big guys on charts. When the news is telling you that tariffs will end the stock market, and you get a knee-jerk reaction that knocks back for 15 minutes, and then prices continue their climb like nothing happened, that's big money coming in saying we could care less about tariffs. So that's number 2. Boy, we took a long time on that one, but I think it's worthwhile. Let's go on to number 3. Number 3, 3 big questions answered about technical analysis. Topics that are misunderstood, and this is not what I'm going to talk about now, but it's part of this presentation. The fallacies of reverse engineering, a waste of time for most traders. Going back testing is totally wrong when you're doing back testing like most people talk about it. Keeping it simple is a long discussion. I like the idea of keeping it simple, but it really is nothing like what most people think it is. The use of cookie cutter chart patterns. By the way, my next presentation, which will be probably in the beginning of October, maybe you guys can email me and let me know. I'm either going to do a presentation on reward to risk, because to me that is such a huge topic, of which I think most people are not even exposed to 10% of it. If your knowledge of reward to risk is, you must have blank to blank ratio, or I can't take the trade, then you're still in the caveman era. There's a lot to talk about reward to risk. I'd like to do a presentation on that, or I may do one on cookie cutter patterns about how they are just insufficient. Topics that are misunderstood in general: the search for Holy Grail and the search for perfect patterns. And what I wanted to focus on here very simply was the perfect pattern thing. And I hit on this a little bit earlier already because it was mentioned in another slide. The more important part of trading is not finding the perfect pattern. It's dealing with the non-perfect patterns we have to deal with. Focus on making money, not being right. There are a lot of ways to make money in trading. There is my trading style, if I had to define it for somebody, it would be called a moment in time. And if you ask me to find a moment in time, it may be hard in just a few syllables or without going through examples of things. But what it means is that you find the perfect spot on the chart from which a move will start. And you may not even know if it's long or short. You may not even know if it's long or short. And that's what I mean. You don't necessarily have to worry about being right. You have to worry about making money. And ironically, I'm in good company with that saying because, and I don't know when I realized this or if I stole it from them or whatever, but because I've been saying this for years and years. But what's his name? Mark Douglas. That's one of his favorite sayings. I forgot exactly how it was worded, but it's that you don't have to be right to make money, and you don't. And it's about finding those perfect moments where you can say, look, I'm not sure this is going to drop here, but here's an area where I know it can't go above, and here's an area where the drop's going to begin. And I know it may sound to you like just talking about a normal strategy, and it kind of is, but it means that finding the perfect spot is more important than finding the perfect pattern in many cases. Hard to explain, but the quest for perfect patterns is really an endless one because you can't define them and you will never know necessarily when you have it. And like I said, reasonable people can differ on what perfect pattern even is. Couldn't two great traders disagree about what a perfect pattern is, which more than implies that there's quite a bit of subjectivity. What if your perfect pattern doesn't occur often enough to make your living? What do you do then? So I think it's important to understand what your goals are in trading, what you're trying to do. And when you get a really great understanding of chart knowledge and you really start to focus on finding a few specific things to do in the market. And again, I'm really big on the concept. I'm not one of these people like, oh, gee, it's my way or the highway. I don't think that at all. I think I know there's a lot of different ways to make money. I think there's a lot of things that are just dead wrong. I think there are things that will prevent you from ever making money. But there can be some kind of oddball things out there that, hey, if you perfect it and you repeat it, and anything that you find that's doable, that's repeatable, and you've proven it, and you can reproduce it and categorize it, it's successful. It's good. So here are the three I just discussed. An hour a day. It's from a chart reader, and the full topics in there. And again, I'll show you how to get to these. Are focus. The general topic is a focus on why good chart readers still struggle to make money sometimes. It's about analyzing your trading records, the very common mistakes that are made in analyzing your records. It's about never getting hurt when you learn to trade or invest, and it's about the right way to make money after you know the charts. The second topic was what knowledge is necessary to make money in the markets. It's from presentation Great Trading. That presentation was about a focus on what is needed to be understood and what is not needed to be understood for great trading. How stops can hurt. There's three concepts in this one. How stops can hurt you more than they help you if you use them the wrong way. The only two times you have an edge, and a list of things you need to know about what makes a perfect setup. And then three big questions answered about technical analysis. It's a detailed discussion about each of the following topics. And I goofed. Ignore that I repeated those three things there. It's about... Actually, this is the right one here. But anyways, if you want to see those presentations, simply go to the homepage, disciplinedtradingstrategies.com, and then you can click on the little free stuff sidebar here. Okay? If you click there, you'll be taken to a page that has free stuff. It has Trade of the Week videos, and there's actually an archive section because there's so many there. You can look at those to your heart's content. Down from that a little bit, there are educational videos, and there's going to be more of these coming very, very soon. There's a couple there now. There's some miscellaneous videos on things. And then there's the prior events listed from oldest to newest. And in the prior events section, the three that I just showed you here are this one, and this one. So you can find the ones I just talked about, and naturally you feel free to look at the rest of those. They're all about 50 minutes long or something like that. Most of them are edited down a little bit to take away some of the blank noise and whatever, okay? So that's where they all are, and that is my sampling of, I think, highlights of my favorites from the last year. They may not be your favorites, but I think they're things that help people the most to make money once you, everybody who is listening. Most of these topics deal with how to help you make money once you know what? Once you know what? The charts. You have to know the charts, yes. You have to know the charts. To get that, you have to really read my webpage for that. Back, on the home page, if you go to that home page, scroll down to where it says, when you're here, scroll all the way down to where it says warning, and we'll talk about what you need to do. But naturally, I'm not one to try and talk people into learning this. You need to make the decision. You're ready to learn it. You have the time to do it, and you have the commitment to do it. Most people take it like kind of dipping a toe in the water. They think they're going to listen to some presentation, and by the power of osmosis, they're going to be a great trader the next day. Well, that's not how you learn to be a doctor. It's not how you learn to be a lawyer. It's not how you learn to be a bricklayer. It's not how you learn to be a good person on an assembly line. It's not how you learn to do anything. You have to fully understand and immerse yourself in what you want to know. And it is not even possible. It is not even possible to gain the knowledge you need to know trading, listening. Even if you take my seminar program and listen to all 3 seminars, you will not have the requisite skill after listening to them all one time. You cannot absorb enough knowledge. So be very careful that when you decide you want to endeavor to learn to trade or invest yourself, whether it's to make a little extra money or to become a self-sufficient trader, that you do it when you're ready to commit to it. That's true, LP. I mean, within a framework. I mean, you have to have the tools, LP, and then you take those tools and you build your own house the way you want to build it, yeah. I use a lot of metaphors, and I kind of like house building, I mean, you can build your own house, meaning you can build 3 bedrooms or 4 bedrooms, and you can make your bedrooms big or small, but you know what you have to do, LP? You have to have the studs 16 inches apart. You have to use the right wiring, and it has to be attached in the walls the right way. There's things you have to do properly, and then there's ways you can make it your own. Hey, Tony, perfect spot, right location where all the stars land. You mean the moment in time thing? Yeah, I mean, kind of, yeah. So here's where we are. So let's get on to, I'm kind of right on schedule. I'm doing pretty good. So let's get on to the last part of this. Unless you have, I'm sorry, time out. Let me pause here and ask you if you have any questions, because I think this is the most important part of tonight's presentation is getting a handle on some of these things. Is anybody, I don't want to rush you. Does anybody else have any other questions about what I've gone over? And again, feel free to explore the free stuff. People ask me, why do I have so much free stuff out there? It's very simple. Can I speak freely for a moment? I've said this once or twice before in the last year. Can I speak freely for a moment? Would you mind? Somebody's got to say yes or I can't do it. Okay. Coming from an environment where before this year, I worked with another company or other companies, whatever the case may be. Unfortunately, with a company, the goal is always, how do we get people to sign up for more stuff? And, I'm just being honest with you, the new people coming in is hard to obtain and limited. So a goal for companies is always kind of to sell more and more to the people that are there because they're the, what they call the low-hanging fruit. I'm the exact reverse. I've made it clear, and anybody here that's been with me will testify to it. If you take the seminar program with me, you never pay for another thing for education. There is no new program coming. As a matter of fact, I added an options class, and that was just thrown into the program. But the reason I give so much free stuff is because all this other stuff, I don't want to put new presentations together and charge people. All this other stuff is important But what's the key thing I kept saying all the time is this is all applicable once you know the charts. If you want to know the charts, you need to understand them and learn them from somebody intensely. If you have a successful trader as a friend of yours, pay him anything that he wants to come sit next to that person for him or her for a month, 2 months, 3 months, whatever it takes. If you don't have that, you know, go to somebody, which could be me if you like me, and get a really good, thorough education. Not a little fly-by-night, listen to this video for 4 hours type of thing, because you can get that free anywhere you need to. Most of the stuff I teach is not even reproduced anywhere. It's not even taught other places. It's stuff that's out of my head. Not the first class. The first class is technical analysis. So my thing is this. If you want to learn charts, I sell a course, a program, and that's what I do. Everything else, I just give you free. I mean, there's a ton of stuff out there, and I'm going to keep putting it out there. Because I know the other part of it is a lot of you are not really ready yet to commit to something more. So while you're doing your other job, you have this time, you can come and collect all this free stuff and begin your education with all of this stuff. And then when you're ready for the final piece to really learn charts, then you do it. Okay? How long do you think it would take a person to learn charts while they spend a couple hours a day and follow suit? That's a great question, Ham, and I do have an answer for you. I have said pretty clearly, well, let me give you what I think the learning process is, and this has nothing to do necessarily with even technical analysis, but assuming, Hamed, that you are a very smart person, and assuming that I am an incredible teacher, if you take my program and you take those 3 classes, 3 Saturdays in a row, right? 3 different classes, 1, 2, and 3. At best, you're going to walk away with 15% of the knowledge. 15. That was 15%. That's a well-known statistic based on a lot of, and if I asked you 90%, you would have spit that out to me, right? After that, I don't hear any numbers, but I can give you my gut is. My gut is the second time the class, there's a big jump. I'd say you go up to 50% the second time you take the class. So many people the second time they go, wow, you didn't say that the first time, Paul. I go, yeah, I did say it. You just didn't hear it. Believe me, I said it. The third time I think you get up to 75, 80%, and the fourth time you're up to 80 to the 90% level. And I think you need to be at the 90% level, Ahmed, to really, be able to do it. In other words, yeah, repetition. And what cracks me up is, and again, I don't want to badmouth anybody. I'm not going to mention any names, but there's places where you take the seminar once and that's it. And even, I'm sorry guys, even video and recordings, they don't work. You guys know that. You listen to a recording, you fall asleep, you're doing something else, you can re-listen to it, you never get the thing. I think you have to commit to do it. And I think, and I'm just being honest, so 4 times, they teach them about every 6 to 8 weeks, so you're looking at, I think 5 to 6 months of just, now if you do it right, and if you do what I tell you after class, and you go and study charts, and you do this, and you practice, and you come back, and then you do it again, and blah, 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 I think you have a really great understanding after you take the 3rd set of classes and you perfect it the 4th time. So you're looking at, and the amount of time you put into the market I don't think matters a lot. You can be doing a couple mornings a week, a day or 2 a week, a day during the week, a day on the weekend. You don't have to be sitting there all day long during the day studying this stuff, not at all. It's the experience and doing the right things with that time. Okay? So hopefully that answered your question somewhat. Well, Hamed, again, I don't want to make this a sales thing. Maybe you can email me, but you retake these classes for as long as I'm around. I've told people I'm around 4 years when I started. That was a year ago. I may increase that next year. I'll let you know. So you keep retaking these. Number 2, in addition to classes, there's something called a practical application and review day where we get together and I show you how the trades that I do every day directly 100% are a replication of what I teach in the manual. We also have a scanning night where we go through and we scan for day trades that meet the requirements based on what I teach. I also do that, we also that night can look at longer term trades. I do a free night with everybody with longer term trades, but it's not really all that educational. And also I have the door wide open for you to email me. As a matter of fact, I insist people, I beg people to send me their trades when they get going, to send me their trading plans to review. And if I get too many questions, I say back to you, hey, let's hop in the trading room, let's spend 15 minutes and go over this stuff. And I've done that dozens of times with people. So I made a commitment to get people to learn this. I'm in that time in my life and having fun doing this. We just kind of became empty nesters. I'm having a blast doing this, and that's what you get. So I think this is good because this is all about the learning process. But again, I've not tried to turn this into anything about what I do. I want to give you guys what I can. Those are good questions about what does it take to learn this. And again, read the warning on my webpage. All right. Oh yeah, and Andre say that too. I mean, not everybody's able to be there, but the trading room itself is also obviously a great follow-up if you are day trading and if you're able to be there. A lot of people, though, Andres, aren't day trading. They are, they're longer-term trading, investing. So with that, I'm going to get going, and let's do this. Let's say at 6:30, I will hang around for anybody who wants to ask more questions about specifics about some of this stuff, okay? So let me go through these trades. This is the part that some of you love to wait for, to see some of this stuff. The 3 best and 3 worst. What makes the best and the worst trade? Well, big money winners are always nice, but that's not my final determination. Here's my final determination. When a plan comes together and the chart pattern you know and love performs as you know it will, and you print out the chart and hang it on the wall, that's a great trade. Now, what I do in these presentations, when I say, hey, three best, 1 worst trade of the week, I'm doing the best and worst from the last 3-4 days. That's what I'm doing. So when I say, here's the best trades, I want you to understand something. I'm going to ask you to give me a yes that you get this. I'm not going back, through the last 3 years of trading and showing you the best trades I ever did. You guys understand that, right? This is not, gee, what's the best trade you've ever seen in your life? This is, hey, I'm limited to the last 3 days. Because you know what? You guys don't need to see something from the annals of history where somebody pulls out, a chart from 1902 and said, look what I did 5 years ago. This is, and I put myself out on a limb when I do this, right? Because I scheduled this 3 weeks ago, and I said, here's the day I'm doing it, and coming up into this day, if I have 3 losing days, I'm not going to look very good out here. Now, it can happen. I mean, that stuff does happen. I had a losing day today, by the way. The week's still good. I had a really good Monday, okay, yesterday, but I'm a little bit on a limb here. But what I show you is I want to show you a typical cross-section simple sample. Say, hey, here's the last 3-4 days, and here's a couple great trades, here's a bad trade, and here's what it was. So this is just recent. So these good trades are good trades, but they're not like things that I would necessarily hang on my wall and say this is the best thing I've ever done in my life. Okay, so I just want you to understand that's what we're looking at here. So I'm going to start with the worst trade. Now, again, this is the worst trade as of midnight last night. I had a worse one today because, to be honest with you, over the last week, even going back over 2 weeks, I look back, I didn't have what I would call a bad trade. Now, keep in mind, a bad trade and a losing trade are 2 very different things to me. I can have a trade that lost money and look back and say, you know what? Here's the key thing. Here's the key, guys, where I think you've crossed a line when you can say this. When you have a losing trade and then later in the day you look back and you say, you know what? I would do that trade again tomorrow. That's what I do. That's a good trade. You know what? It just didn't work today. I know that's good odds. And that's what, the losers I've had over the last, couple weeks. I haven't had a lot, actually. I had a decent time. But that's what they were. They were good trades. And even this one, this wasn't a bad trade. I'm telling you why I'm putting it on here as the worst. And it wasn't money-wise. I had a couple of full losses. This was a half loss. But I'll go through it just to show you why. But this was WPX. It's an energy stock, which is one of the reasons it was kind of a worse trade for me, because energy stocks in the morning, and I know this, they don't always act quite right. There's something about energy, and it probably has to do with oil prices across the world being traded and influenced and things and blah, blah, blah. I try and stay away from energy oil stocks in the morning, and I went ahead and did this one because I love the chart pattern. So for the 4 trades we're going to look at, here's the format we're going to have. This is the worst trade. It was Monday at 9:30, Monday, 2 days ago, 9:30 a.m. So it was 9:30, 9 a.m. So it was kind of, second thing in the morning. I'm putting on here the source of the play. I thought you'd want to know, where does this come from? Are you just sitting there and some pigeon drops a note on your desk that says trade WPX? This came from a daily scan, not daily charts, but a scan that I do every day of hourly charts. So just so we're clear here, every day to prep for trading, I scan about 1,000 daily charts and I scan about 300 hourly charts. The hourly charts are higher volume stocks. that are my primary focus in day trading. The day charts, some of them become good day trading opportunities. Some of them I look later in the day because if they're moving because of the daily chart, they can become good day trades as well. And naturally, the daily charts could also be swing opportunities. Okay, so I'm putting on here where the source of the play came from. Now, for an average person, I think it's good that you track the source of your play. The source of your play may be some newsletter you get. It may be the trading room you're in. It may be your own scan of daily charts, maybe your own scan of intraday charts, maybe a scanner that you use. I think it's good to track that so you know where you're getting the ideas from, the good and the bad ones. For me, the source of my plays is either my daily scan, my hourly scan, the gap list, or the trading room. The trading room, sometimes the members provide an idea which I did not have, that I say, hey, they suggest things all day long, but quite honestly, 90% of them are not things that I want to trade at that moment. They go on a watch list, they go on a list for later. But once in a while, somebody say, hey, you know what? That's right up my alley. Okay. Rich, to get to the point of your question, because I've been doing this a while, it takes me about 15 minutes to scan all those daily charts. I do it very, very quick. And it takes me about 10 to 15 minutes to do those hourly charts. So I typically do my scans at night while I'm watching TV or doing something else. I'm kind of one eye on the charts and one eye, and sometimes I'll just crank right through them. So I'm talking about a half hour of prep time. I know, I'm glad you asked that because the way I phrased it, it probably sounds like, holy cow, what are you there for days? No, I spend about a half hour, and if you're newer starting out and you start with a little bit less of a list, I suggest you maybe spend an hour preparing. See, you don't want to burn yourself out doing stuff that's not paying for you. So, I mean, you think you start off with something reasonable. And then, of course, the gap list, that takes like 5 minutes to do. Because I have a scanner that shows me the gaps. There's 20 gaps. I run through them, eliminate 2/3 of them. And so that just takes 5 minutes in the morning. Okay? And that's what prepares my final list in the morning. And actually, you're going to see it in a minute, Rich. You'll see it in just a second here. So the strategy now, and this first one's going to take a minute because you have to understand how I think. I know most of you probably just use the word strategy. And if I said the word strategy, you'd come up with some names like, Head and Shoulders or blah, blah, blah. Let me give you that example. Who's familiar with a Head and Shoulders strategy? And it's not a trick. I'm not going to yell at you. Okay, Maura. And this is half I know and half I'm kind of asking, where do you enter on a Head and Shoulders strategy? Where do you enter? Now, obviously, Head and Shoulders is not in my repertoire at all, and you'll hear why in just a minute. Under the neckline. Okay, let me just make a comment to you guys. And understand, I'm not against a Head and Shoulders strategy because actually there is an equivalent in my book. It's actually a transition C, blah, blah, blah. It doesn't really matter. But the point is, if your total synopsis is I'm playing a Head and Shoulders, I enter under the neckline, you ready for this comment? You'll never make money. You'll never make money. If your entry concept is part of the strategy, if it's that vague and that broad, you'll never make money. Now, I would say never. I mean, of course you make money on a lot of trades. And by the way, the concept of Head and Shoulders is valid. But do you understand what I'm saying by that? I mean, you need to have a more refined concept of entry. And there's so many Head and Shoulders that won't work. And I don't want to get into that now, but you need to, so I actually divide my thought process, and this is Paul's stupid mental thought process. I have the strategy, and I call it POP strategy. Yes, PF, it'll be recorded. POP stands for picture of power. Whenever I want to get into something, there has to be a driving force that's making that stock go higher. And that could be a superior higher time frame. It could be a wide range bar. It could be a gap. It could be any extreme example of relative strength or weakness. Those are the things that big picture get my attention. For example, on this one, it was a daily major support and had an hourly DTS breakout setup. But you know what? If that's what you trade, you're always going to have a hard time making money. I know that a breakout play has an entry concept built into it, and I know a daily major support buy setup has it, but you'll never make money doing that. What was my entry? My entry was a 2-minute DTS buy setup with a be the tail entry. Now, I'm not going to explain what that means exactly because it takes me 2.5 hours in the course, but do you kind of understand what I'm saying, guys? that this is the big picture. Why are you looking at this? What's going on? Why is it going to move? And this over here is, okay, how do you get in such a way then you can make a lot of money if you're right, you can make a little money if you're kind of right, and you can maybe get out without a full loss if you're wrong. Does that make sense what I'm saying? I know you may not understand the whole entire concept, but just generally speaking, we need to have a reason we're looking at this trade. Not just something that's languishing on the chart. And then we need to have a really cute way. And I guess if you combine these two things, it's kind of what I call that moment in time thing. So this was the exact terminology. And I guess this is like seminar terminology. And the meaning behind those words, of course, would be minutes and minutes or hours of discussion, what it all means and what's good or what's bad. But that's the terminology. And so here it is. This is the tracking sheet from the room for that day. And on this sheet, I've put recently to help the people who are students of mine. You don't have to be a student to be in the room, but for those who are students, I put the strategy and the entry in here. It's kind of almost code language because it's all acronyms for the stuff I teach, but people generally know what it means. And in the room, I'll always answer the question if somebody wants to know what it means, but because it's fitting on a little sheet here. And don't worry about these yellow dots. That's just how many trades at a time, so you know how much money you would have needed. So this was the first trade of the day, and it turned out to be a half loss. And I'll show you the chart here in just a minute. There's 3 slides. There's going to be this. There'll be where it came from. There'll be the chart. So we will look at the chart. But that's just a summary of this one. It was the first trade of the day. It was an energy stock. This was the loser, so this was the bad one. Where did it come from? It came from this watch list. This is the watch list that is given to the room in the morning. This is what I do. And you were just asking, Kurt, I think it was, here's the summary of what I do. This is my prep for the day. This is the summary of it. So I have the gap list up here, the daily watches, strong and weak, and then the hourly chart watches. I don't separate them strong and weak. I just don't. I don't know why I don't. So there it was. It was WPX. Actually, I caught this when I was scanning the hourly charts as an hourly breakout play. And when I looked at the daily chart, it was on major support. Put those two things together. It's something I want to watch. And it gave me a perfect entry. Okay? So everybody caught up with where we are? We're on the first trade. This is the worst trade. Is WPX. One of the worst things about this trade was the fact that it was an energy stock. And they don't perform right. Here's the charts. Now, these charts on the 4 different trades you're going to look at are all set up a little differently because it's what I want to emphasize. Here, the emphasis was, I put a 15-minute chart. It could have been a 60. I called it a 60-minute breakup play. But this is what I was looking at. So I'm scanning my charts. I'm going through the 300 hourly charts. This is, of course, shown on the 15-minute time frame. I just chose to do that. But I see this gap down, wide bar in consolidation. There's a picture of power to me. There's a picture of power that we have a superior higher time frame coming out major support. I look at the daily chart. There is a valid major support area there. We have the wide range bar up, a consolidation. Boom, boom, boom. My heart skips a beat. That goes on my watch list. I only have, how many were on the watch list that day? Hourly charts. There are only 6 on there. 300 charts. I picked out 6. My heart skips a beat. Boom, boom, boom. But I have a lot of things on the watch list. Why? Because anything I put on the watch list may not ever come close to doing what I want it to do to enter it. So when I'm sitting here in the morning, now keep in mind this, where's my pencil? I may be confusing you here. This is the end of the day. That's what I'm looking at the beginning of the day. Okay? And that's what I'm looking at the beginning of this day, that big green bar. You follow? So, and I try to draw those arrows that are showing that. That's what those arrows mean. So I looked at this, and what I need to see happen is I need to see a sign of strength break above that base, and then I need to see a pullback. And if it's in the morning, it can come crashing into the base. That'd be great. But I have set in my head exactly what it is. And here's the 2-minute chart up here. Now, on this set of slides, the 2-minute chart is the little baby chart up here. So do you guys follow these slides okay? I know it may be a little confusing, but so right here the market opens. Right here the market opens. Boom, boom, boom. Flip to the 2-minute chart. The stock had gapped up and it comes crashing into this base. That's exactly what I want to see. Now, I have in my head for every chart on my watch list, or every chart on my watch list that makes a hot list, I have in my head exactly what I need to see happen for me to take the trade. If it does not happen, I don't trade it. It's called, I make the stock come to me. I don't chase things. This did exactly what I wanted it to do. The red and blue lines are moving averages, and these happen to be the 20 and 40 period moving averages. That's all. They're not terribly important. This solid blue line is a line that I added to this slide to show you what I'm looking at. I'm looking at daily major support. I'm looking at a 15-minute chart breakout. Okay, this chart came in, I got in, it bounced, it had a nice initial bounce, not enough to take any profit, and that was the high. That was it. You can see if you go from the 2-minute chart here, which is about what 20 minutes into the trade, 40 minutes into the trading day, whatever that is. Here's where it picks up, and it fell. Okay, I ended up raising the stop. The way I entered this was in such a way, it's called a beat the tail entry, where I have the option of getting out at a reduced loss, and that's what I did in this case because it should not have, it pulled back deep and it should not have been retesting that area, and I was correct in doing that because it fell for a long time. Now, the big picture, let me go back, the big picture concept, daily major support, hourly, was that wrong? No, actually it wasn't. Look at the next day. I was a day early. See this next day? That can make your entire trading week. I made the mistake, and this is why it's the worst trade for me. Starting yesterday, going back 4 days, this is the worst trade for me because I kind of have a rule about not doing energy or oil in the morning, and I violated that rule. And also, even though I do like this setup a lot, it doesn't shock me because the hourly chart, if you look at it just right, it was a little extended to the point that it doesn't surprise me. It came below this base to regroup and then shot higher. From this area right here, it shot higher then. It went higher and boom, the next day was a big day up. So that's the worst trade. Any questions? Best number one trade. Now, by number one, I don't necessarily mean it was my favorite. I mean that it's chronological. Okay, it's chronological. So this was the first one. This was Tuesday. This was 4 trading days ago for me, not including today. I did this last night. So boom, 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 boom. I was off Thursday, Friday. So this was Tuesday, which was 4 trading days ago for me. This was ATVI, Activision. Tuesday entry at 10:11. It was a short. Source of play was a scan from the hourly charts again. It's an hourly DTS sell setup. It was a picture power strategy, and the entry strategy was a 2-minute DTS sell setup with a beat the tail entry. Why is this a favorite for me? Number one, I always prefer shorting over long. Here's some words of wisdom I'm going to give to you that may not make sense until you've traded a long time or have this mentality. When things are bullish and they're rip-roaring bullish, you need to be bullish. When things are bearish and they're rip-roaring bearish, you need to be bearish. Most of the time, however, the market is neither rip-roaring bullish or bearish. It's somewhat choppy, sloppy, and sideways. During those times, be bearish. I always like shorting rallies into resistance better than buying longs on support in a choppy market. They will work better because fear moves things lower faster. So I like this number one because it was a short at a unique moment. I kind of thread the needle here because it didn't turn out to be the best short long term. Didn't have to be. It only had to make money that day. And I'll show you the charts here in a minute. We'll go over it. I think that was, I'm trying to remember what the market was that day. Yeah, the market was still, the market, so I had a bearish market bias as well because this was 4 days ago when the market was still falling. Okay. Aaron, I want to point something out that this is a room summary and it is not a picture of my personal trading log, and I use 500 as the room risk. It is not necessarily my risk. It is representative, and you can plug in any number you want to for your risk and recalculate the things. But if you are, everything that I trade is pretty liquid. I don't go to little stuff because you need to get the share size necessary, but it depends on your stop. So if you have a $500 risk and you had a 50-cent stop, you'd only need to buy 1,000 shares, right? And you can do the math from there. And naturally, when you get to much smaller stops, you have to buy more shares, and that's where you have to make sure that you are trading a stock that's liquid enough to do that. So if you're doing a 10-cent stop, you'd have to have 5,000 shares, and you have to be trading stocks like, for the most part, like BAC or stocks that are liquid that can easily trade that amount. Okay. So boom, boom, boom. Summary. Here is the source. Came from, again, from the 60-minute charts, and then you'll see why in just a minute. I'll show you the charts. This stock had, this is on, I shorted the top of this green day. It came back. Was a good play, but it regained strength. I shorted this because it had this gap down, and it's the hourly chart that really did it for me. Do you see this hourly chart? It gapped down. The gap is not a bearish gap per se, but when you run continuous, now this is not going to be a favorite of mine to do unless it followed through and ran higher in the morning. It's just what it did. So when it followed through and ran higher in the morning, I didn't trust this initially. So I let it pull back, and the short came right in here on the 5-minute chart. It's called a retest and failure pattern. And when you want to get a clue for what I mean about entries and what great entries are, the entry was 72.93. You go look at your own charts and see what the high of that rally was. That's just pennies off that high. So the short was 72.93. I used a stop at 73.31, and then I grabbed profits in 3 areas. Well, you can see where they were from the thing. I don't remember off the top of my head. It was at 72.44 on that first drop, and then 72.17, and then 72.52 on the way back up. The big target was 2 full risk units right in the middle, and that was at about 11:45. So right in here. Yeah, see this huge red bar? And actually, I think, if I remember, I had stepped away from the screen for a little. I like to walk away a lot while I have positions, not stare at them. And I came back right when this red bar was forming, so I got very quick to trail some of that right there, and then the rest trailed out higher. Now, as it turned out, if you look at the charts, you have to look at your own charts. I don't have them here. But ATVI, that was the low, and it rallied from here the rest of the time. So big picture, while I used the daily chart as an initial rationale for being bearish that day, it turned out to be just a one morning drop, and that was the end of it. So I was kind of lucky in the sense that I threaded the needle, found the perfect entry, got what turned out to be a pullback short, and made a nice play out of it. Okay? So that's ATVI. I think we're done. Number 2 was P, and this was Monday. This is 2 days ago. P was found from a scan of the daily charts, not the 60-minute charts. The big picture strategy was a DTS daily buy setup, and the entry was formed off of a 2-minute DTS buy setup with a B the tail entry. There's that darn B the tail entry again. It was entered at 9:41 in the morning, 2 targets taken. That second target was held late. But keep in mind, let me make this point here. For day trading, I am not a promoter of all of sitting there all day. Anybody in the room could testify to that. I think you need to hit certain key times and walk away the rest of the time. I think it's very detrimental to sit and stare at the screen too much. The open is always, you need to be prepared, so I'm always there, from 8:30 to 9:30. And the opening, I have to admit, is a very opportune time most of the time, because there's a 9:35 reversal time. There's a lot of stuff going on. There's often good plays, but sometimes there's confusion. And sometimes I'll wait till 10 o'clock. Sometimes I'll try something at 9:30. It depends a lot what's going on. But then you hit key times. There are morning reversal times that make a big difference. We're usually sitting there, the first hour at least, till 10:30, pretty actively talking. Sometimes I'll walk away, get some coffee for 10 minutes if there's nothing going on. But I try to hit, 2, 3, 4, 5 trades a day and spread them out. And while sometimes I may do a trade at lunch or in the afternoon, I'm not sitting there all day. We'll sometimes, right, room at 11 o'clock or 11 o'clock, I'll say, okay, I'm going for a run. And I'll be gone for 90 minutes. I may have a position open. And I'll just put my stuff in place, a target, a stop in place, and leave. And say, okay, our next thing we're going to do is look at the noon hour and see if we hold the support area. Come back, look at the charts, and say, okay, here's something to do, or here's nothing to do. It's very detrimental to sit there for 6 hours staring at charts. As a matter of fact, the mistake I made today, I think, was the fact that I got glued to things a little bit too long, and I initially said I was going to walk away, and I didn't. And I think that cost me today. WPX not consolidating enough on the hourly chart. Well, let's look at P, and I'll answer that. I said that, Tony. Yeah, I alluded that was the second reason it was bad is because if you look at the hourly chart, the consolidation versus the amount it moved up perhaps wasn't enough, and that's why it pulled back below the base before it went higher. Yeah, so I agree with that. That's why it was a bad trade. P came off of the Monday's daily watch list, and again, this is what I fill out every morning. It's given to the room halfway complete at 8:30, and then at 9 o'clock I finish it off with the gaps and or the hourly charts, and they get it. And P was right there on the strong daily chart list. Okay, here's the charts from P, Pandora. This is what it looked like when I put it on my list, right through here. This was not on the chart yet. See where that arrow is drawing? That's the day I traded it. So this is a beautiful daily buy setup. This is a beautiful breakout, pullback, buy setup by minor support with this huge gap shakeout move. There's a lot of stuff about this daily chart I just simply like. It really could have been a swing trade. 5-minute chart, well, the entry was going to be here. It initially ran up, and I was afraid I was going to miss it. But then lo and behold, boom, it came slamming back to test this area. B the tail entry, 2-minute chart in. This stock took a couple minutes to get going, and then it just ground higher. Now, the great thing about this is I took some off the table on the morning rally a little bit after 11 o'clock. So on this pop right here, see we tested the high of the day? So that was a target for me. That was kind of what I call a get safe target. So that now this trade is going to be profitable no matter what. And then from there I went into management mode, and this thing was just a beautiful chart all day. I just let it run up until I took I think it was right off the high here. Right off the high. I did a really good job in the back part of this, getting it off the high as well. Sometimes my memory fails me, and I think I do better than I do. But it was a 3-hour back half, and it was at 2:30, at 9:31. Yeah, so I got it just right off this high, right there, on the exit. Okay. Do you set it up, then walk away? And Rich, I don't usually walk away for the entry, simply because I'm usually not doing entries that wait, minutes and hours to happen. Usually, when I get very focused on something and I have it kind of trapped, either it got away from me and I'm letting it go, or I have it trapped and it's going to be, okay, it's just a matter of where I'm getting in. So usually I'm sitting there, finger on the button for the entry. But then once I get in, I don't sit there and stare at stuff. If I planned it like I knew P was off the daily chart, I knew it could be held all day. Why? And I know some of you do this. I just know you do because I've worked with, lots and lots of people. I know some of you would sit there and stare at this all day, right? You just sit there and stare at this like something's going to happen if you take your eyes off it. All what happened by staring is you probably would have got out right here and lost the day's profits. Let it do its thing. You get a good pattern. You spend the time looking for it. It's doing the right thing. Let it do its thing as much as you can. So that was P. Chronologically, that was number 2. What do I love about this one? The daily chart is a thing of beauty. It really was. It really probably should have been, I should have thrown this into the core swing account. I did not. Oh, by the way, I put on some of the emails for today that it could involve long-term trades. And while I have a bunch of long-term trades going on, nothing made that list. Nothing happened the last week to speak of with my long-term trades. I've had some decent ones, but nothing thrilling happened, so it didn't make the presentation. It could have, but they didn't. They're just been kind of boring. That's a great question, Maura. I think understanding how good all or nothing can be is something everybody needs to understand. It's something I do as part of what I teach. I think you can do better than all or nothing, but all or nothing beats what most people do if you're a reasonably good trader. So I do not go for all or nothing, but I use a very conservative management approach for the most part. Meaning I let things have their pullbacks and their gyrations and pivot, and then I start locking stops. What I want to say more is if it gets under this area, if I'm long, what I want to be able to say is, from knowing the chart fairly well, is that if it gets under this area, that's a problem. So many times people get out of something, they look back, and you got to say, well, what was the problem? Why'd you get out? And they'll say something, well, the stock collapsed. And you look at the chart, and there is no collapse, right? It never collapsed. It's in their mind it did. Or maybe they're playing a 15-minute chart, and they want to hold it for 3 hours, and now they're staring at a 1-minute chart. And the 1-minute chart collapsed, so they get out. So I use intelligent, conservative trailing based on the chart, not based on X cents, but based on, never a percentage stop. That's comical, Rich. You never use a percentage stop. That's meaningless. You find the key areas off the chart, and then you manage properly in terms of focal areas they don't use for stops. And then I also manage stops a lot of the time too, which is a whole nother discussion. I understand what a trailing stop is. They'd never do that. Not trailing percent, not trailing cents. It's, You're not going to make money doing that probably either, because you're giving back too much most of the time. You have to either see. Let me interject this too. And again, it just comes from just partly from myself. I had to develop as a trader, and also comes from just seeing this in hundreds of other people. Most people get stuck in the middle managing, Rich. You know what I mean by that? Does anybody know what I mean? I'm going to the whiteboard here. They get stuck in the middle. Does anybody know what I mean by that without even explaining it? I will, but in management, most people get stuck in the middle. What I mean by that is this. Something's going up, boom, 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 and somebody has some profit, and they just decided to get out here because it dropped too much on them. But then the stock goes higher, right? So maybe they got in here, so either you need to be a micro chart manager, and it's not bad to do that if your entire style is based on that. See, relative to your stop, you have to always be making money. But it could be you're on a more micro style and you want to sell rallies. But then get out really early if you're going to get out, or live through the pain and take the bigger run. Do you see what I'm saying? But what most people end up doing is they try to hold for the big run, right? And then the pain gets to be a little bit too much, and they get out right when they should be getting in, and then it flies. So they end up with very little profit. And that's what happens when you percentage trail too, Rich, almost all the time. Does that make sense, everybody, what I'm saying? And that's what I mean by being caught in the middle. If you have a good play, let it play and get the money. And if you can't do that, then take your profits, but don't give back 90% of your profit and then say, well, no, I can't take it now. In other words, you have to have a plan for all this stuff. Mimi, it's too much to go into here because it's not. I'm not trying to put you off in any way, but it's a very long answer to that. It's not like, and I think that's what's important to understand is that any 5-word answer I could give you would be terribly insufficient and do you harm, not good. Get into manners. Yeah, well, I mean, in general, Maura, I believe in initially giving things tons of room. I believe that I'm a good trader, so I picked a good stock, and I'm going to let it do its job. But then as I get incrementally closer to my target, I will incrementally increase my concept of management, if that's the general answer you're looking for. How to specifically do that, I think takes some explaining. Okay, right. Okay, so we're eye to eye on that. Good. And by the way, Maura, that's the reverse of what most people do. I mean, most people have good trades. They never get off the ground. They're out of them before they go anywhere. Okay, so that was P. And number 3, Walmart. And by the way, we're kind of on schedule because this is the last group of slides. And then I have one last thing for you, so don't take off just yet. Walmart. This was Monday also, as it turned out. I'm not hiding Tuesday. I made a little money Tuesday, but there was just nothing spectacular. Tuesday I was kind of mad because I forgot why. Walmart, there it is, WMT. Walmart, 1113 entry, took it in 2 targets. Now, I only risked a half risk unit on Walmart. In other words, I do these with the room, I give them to the room, and I'm telling them exactly what I'm doing so that they can do, they can follow or not follow, do what they want to do. But I had open positions going on. I think all of these were, all of these were like open when I did Walmart. I had a lot open. And things were going okay. Like P was, already on its way to being a big winner. I think WPX was never doing well. GME was doing okay. So I wanted to take a half risk because there was nothing wrong with Walmart. Do you understand that, everybody? There's nothing wrong with Walmart, and I told that to the room. Just personally, I don't want to risk a full risk unit because if everything goes bad, I'm going to be in trouble this morning. I don't want to be in trouble. Does that make sense? So it was a half risk unit. So the money here, is based on a half risk. So risk reward wise, this is the best trade of the week actually because it averaged about a 2.5 reward to risk, but I only threw half the money at it. So if you want to keep that proportional as you double the money. So Walmart was the best trade. Oh yeah, Mimi. Yeah, that's what these are from. I mean, this is yes. We get together with the room. We start at 8:30. The people log in at 9 o'clock. I get on the mic. I've given them the watch list. We review the plan for the day. We're usually down to a couple handfuls of stocks. I tell them what they are. As they're getting close, I'm on the mic. I'm saying, here's what I like. There's generally speaking, there's plenty of notice. I like to be very honest. I mean, we're trading live once in a while. Things get a little close. But the tip, and there's people here that are in the room. I mean, please tell me if I'm wrong, but I mean, 95% of the time, people have plenty of notice, and they're generally liquid stocks. So, you can do what you want to do. The typical person, I think, is developing or is developed as a trader fairly well. They probably do mostly their own thing, but they take the best of what they like, the best of what I like. They take my comments on the market and on their ideas and on my ideas with a grain of salt, and they do what they want to do. Sometimes they take my trades, sometimes they take their own. There's some people that follow me more precisely, but yes, this is thoroughly explained in the room for the most part. Thanks, Andres. Andres is in the room there, so he's your go-to guy if you don't believe me. Of course you believe me. Why would I be lying to you? If I was lying to you, you'd come in on a trial, you'd say this is stupid, and you would leave. But if you do come in on a trial, guys, understand, it may be a little different than rooms you're used to. I mean, I'm not sitting in there screaming and yelling and barking out scalping trades. I don't scalp, per se. I don't have anything against it. I think it's a tough way to make money myself. I'm not sure I know anybody that makes money scalping. I don't know, to be honest with you, I don't really know for sure a lot of traders. But I'm a little more, laid back, a little bit more of a strategically from a 15-minute or hourly chart person. But there's times when, you got to move, especially if you're trading the first 10, 15 minutes, things are happening and, you got to do what you got to do. But for the most part, I'm a little more laid back and we have time to do things and talk about stuff. So anyways, Walmart, wrapping it up here, coming in at 6:30. This came from a trading room member. Going back a while back, I used to be 20% of my trades came from the trading room. They gave to me. In other words, people are scanning and looking, throwing out ideas. The room right now is just a little quieter. I don't have quite as many suggestions coming. But this one was one of these that somebody threw it out, and I said, hey, I like it. And I waited a while. It didn't happen at the time they threw it out there. Strategy was based on a DTS breakout, daily chart breakout, and a 15-minute DTS buy setup. That combination was the picture of power, and the entry was on a 1 minute. See, my entry comes down to a 1 minute chart. I'm not trading a 1 minute chart. I'm not scalping, but my entry is refined down to that moment in time on a 1 minute chart. 1 minute secondary sign of strength. And here is the source trading. Remember, there it is. I actually captured the little chat room. Jeff, take a bow if you're here. I don't know if you're here or not. I told you you're going to get mentioned. I don't think he's here. He doesn't need to be here. Walmart, 2 minute buy. Yay, Jeff. And what's that, Steve? Stop of 96. You did not think it should trade more than 50% of the opening move. I'm not sure what you mean by that. Here's the chart. Maybe you won't have the question, or I'll answer it, or you could ask it a different way. So Walmart, now keep in mind, I did not have this. Well, it's a B the tail entry, Steve. You know what that is. You're Steve, right? Yeah, you're Steve. It's a B the tail entry. So it wasn't really a tight stop. Kind of was. But you know how those work. It really wasn't that tight. And it was also a half risk. Keep that in mind also. I did this half risk, so that may have influenced the size of the stop. I picked it a little bit because I could have let it slide around a little bit. So somebody threw this out. Now again, keep in mind, I did not have this on my chart. Now that green bar is the day we were trading. So before that green bar formed, notice there was nothing about Walmart to look at. Do you see that? There was nothing about Walmart. If I erase, you guys follow what I'm saying here? This is the day I was trading it. So if you erase all this, and I'm talking about at open, should that be on my watch list, there's nothing going on here. And that's why one of the things I do is scan during the trading day. I use this scanner and charts, and I scan during the day. Because here's Walmart that was just asleep. It was just a nothing chart. And all of a sudden, you see what happened? Boom, it blasted off, and it blasted across the entire daily base. Does everybody see that? That catches my attention. So somebody in the room noticed that. I did not. And somewhere in here they said, hey, buy setup for me on Walmart. I pull it up. I see the breakout in the daily chart. I see the 5 minute wide bar and the pullback. I'm like, hey, I'm all over this. So it was actually played right in here. and it was a be the tail entry, which means the stop was down at, where was it at? I don't have it up over here. It was yeah, down at 86.39. So it was about a 20-cent stop, which yeah, you may think is tight for Walmart, but it was half shares. And I got in the entry. If you look, my entry was right on that low. I mean, it is right on that low. So that full stop was thrown down below here, and that's what cushioned it here. This never came close to stopping even in here. And then, of course, I was kind of frustrated because I sat with this all day, and then boom, 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 it clawed its way higher into the close and made a really nice trade. Okay? So you see, Steve, you understand this because you're in the program, right? It really wasn't all that tight. I mean, it was down to here. I felt I had the right area. I felt good about this one. Hey, Alex, are the best worst trades we're seeing from a day from your gap course? Well, Alex, they're not from either. Well, Alex, if you don't mind, let me answer your question in 5 minutes, okay? Let me push that so I can get everybody out of here, and then people who want to talk about courses can hang around, but I don't want to bore everybody else. Some people are here just for the good stuff, and they want to get out of here. So I will not forget your question, okay? I'll be back to it. The gift. That is, don't even tell me where it's from, but that's familiar language. I know your name, Mauro, but forgive me, I normally know logins better than actual names, but you've been around a while. The gift is, somebody used that talk. I forgot who it was. Yeah. All right. Email me. I forgot your handle. You can type your handle in here. Yeah, I know. I should know where it's from too. I'm drawing a blank though. It'll come to me later. I'm just talking and I have a lot of stuff on my mind. But yeah, somebody used that terminology, the gift. Yeah. Really? I should know that well? Was that his language? I didn't think it was his. Was it really? Okay. I thought it was a moderator from a few years ago. I guess people picked it up and used it. I'm not sure I even... Okay, all right. So, anyways, there's the trades. So, this was hopefully a fun-filled 90 minutes for you. I was really happy with the presentation I put together from my end because, my goal is to try, like I said, to impart to you as much stuff as I can because I know a lot of you simply are not in a time or a place, nor ever will be maybe, to try and learn this full time. I do suggest that when you go to learn this, that you set some time aside, that you don't quit your day job, that you come in a couple of mornings or one day a week, and people that have very flexible hour jobs is great to start this with, or have some money put away to be able to not have to worry about paying the bills with your first trades if you want to learn to do this. The next free event coming up is going to be the Friday half-day seminar. And this is a real seminar because the seminar students are required to take this. But what I've done is, and this will start to answer part of your question, Alex, I currently teach 3 seminars. And, well, I teach a 4th on options, but that's every 9 months or so. But the 3 main seminars are Mastering Technical Analysis, Mastering Advanced Tactics, and Mastering Gaps. And this half day is part of the first class, really. It's the Friday before the first class. And what I've done is I didn't feel comfortable. The first day is a packed day. I mean, I have a hard time getting done by 6. It's getting harder and harder as I talk more. And I didn't want to take that day and fill it full of too basic stuff. This is a chart, and this is a time frame. But yet, some people that are brand new need to know that stuff. So what I decided to do is pull out all of the real basic stuff that you need to know. And by the way, it's not all that basic. I cover a lot of important stuff in here about order entry and about reward to risk and about understanding how to make money. I put all kinds of important stuff in here. But it's what I call the soft stuff. It's not about learning the charts. And I put that into a half-day class. And I said, hey, why not just invite everybody to this? This is not the good stuff. This is not what you make money from, but it's all needed to know. So that first half day is a real class, and it's a half day, and that's coming up. It's free to everybody. You will get notice about it. Not to worry. If you're here, you're on the list, and you'll get notice of this. So it's Friday, September 21st. That is not this Friday, but a week from Friday, right? Is it a week from Friday? What is today? Today is time is flying, but yeah, it'll be a week from Friday. And that, of course, also kicks off the seminar program, because then the next day is class 1, the following Saturday is class 2, the following Saturday is class 3, and those 3 classes are taught every 6 to 8 weeks, okay? So that officially is the end of this. I hope you really enjoyed this today, and again, I just try to provide, and don't forget to go to the free stuff page I just try and provide a lot of great information as much as I can. But remember, the whole prerequisite is at some point, if you really want to do this, you have to really learn charts. And if you don't like me, I get it. I'd actually have somebody, oh, actually on the site, you can search for it. I actually referred somebody else on my site. How's that for a guy? And I have a couple people I would advise you to stay away from. I'm not going to publicly talk about them, but if you ever have a question about what you want to do, feel free to call me. We can chat, okay? So with that, yeah, Maura, Tazgirl, you guys all know each other. I got to know who you are, Maura. I know Tazgirl, but thanks, Ajit. So now I'll take any questions you want to take about just, DTS or whatever. So let everybody else get it. I'm done teaching. How's that? My email, Maura, is it's Paul at Discipline Trading Strategies. I can copy and paste here for you too. But if you're on the site, it's hard to miss it. I'm sure somewhere. But here it is. I can't imagine anybody would have a hard time finding the site. The site's a lot to type the first time, but once you type it once, guess what? It pops up in your Explorer or Google window every time. Here's the free stuff page. And once you're there, I'm not going to put all the sites. You can click on the home page and go to the home page and read the stuff I told you to do. Werner, thank you. Wow, look at that. Werner is here at 12:45 a.m. Thanks, Werner. All right, so I'll go back and answer Alex's question, and then I'll take any other questions you have. But Alex had a question asking to wait for. What are the best they're seeing from your gap course? Well, Alex, they're not from a course. And again, there's 3 courses I teach. These are the trades from the last four days. The title of this was The Best and Worst Trades of This Week. So, and you must have come in late because I try to emphasize that I do not like to, when I'm doing a presentation, I never like to go back to the great trade from the summer of 14. I mean, who cares? Who cares what you did once? What you guys should care about, excuse me, is what happens every day. What did you do this week? How did it go? What are the good and bad trades? So when I put this out there a month ahead of time, naturally I'm hoping I have some good trades to show off, not just all bad trades. But these are the trades from the last 3-4 days, and these are all trades that are done in the trading room. So trading members of the trading room, have all seen these or been involved with them or aware of them, whatever. Okay. Can you share with us a broker and trading software you use? Yeah, Sally. Here's my thing on that. If you log, I have 3 different platforms, but the one that I show that I do my homework on is TradeStation. I don't like giving recommendations at all. Period. Here's why. For this thing, for this topic, because number one, I'm not sure I'm even the right person to ask in that. I'm the right person to ask about technical analysis and charts and all that good stuff. But one person I've used for so long, I'm not sure, my needs are not your needs. The reason I have a broker is not the reason you should have a broker. If you want to know just what's the best price, well, I've been with one place a long time. I don't think you'd get that price. You should Google it and find out what it is. You should find out if you want to do, price per share trading if you're starting out really small, or if you want to have price per trade so you can have unlimited shares. As far as charting platforms, again, because I've been stuck on a couple platforms for a long time, I don't know all the platforms. I use TradeStation. It's okay. It's what I use. I like. I've used eSignal. I've used Realtic. I've used IB. I've used a lot of stuff. But I'm not really comfortable giving recommendation because I'm not even sure what I love the best sometimes, and all the questions need to be answered. Really, they're not about what I like. It's about what you need. You know what I'm saying? And I'm not even up to speed on what you could get for the best rate out there today. I'm not a broker person. So, you know what I'm saying, Sally? I'd love to help you in that, but I just don't like giving recommendations because I'm just not the person to ask. I think you just do your research. You know what I mean? A lot of people, for example, like Thinkorswim, and I've never used them. I don't even know what they are. So I don't want to recommend something when there's better stuff out there. I just don't know. Okay? Thanks, William. Anything else you guys want? Hey, thanks. Thanks, Ahmed. How much is your trading room for course? The trading room can be entered by anybody. I do not require that you are a graduate. And for the cost... Before I tell people the cost, I like to tell them that it is. I get people turned off because they think it's too little because there's prices out there at $25,000 and $8,000 and all that. The total seminar package is $29.97, and let me give you the link to it. So it is what I would consider to be not very pricey because that's what I want to do right now. I want to get people on board and help them the best I can. And here it is. So there's two things I'll give you to look at. If you really want to learn about the courses, there is a document that really walks you through it pretty well. And here is, well, it's a site, but here is that page. That will give you a great rundown initially, Hamed. And then also, if you just simply go to the services page, there's additional information, and that is just here. And that's also where you would find out information about the trading room. Okay? And actually, if you go down on this little folder, there's a link to stuff about the trading room too. Okay? Yeah, Joel, it's funny you said that because I would actually kind of tend to agree with it. Not that I want to officially make an endorsement or non-endorsement, but I have to kind of agree with you. I do not even, I use charts from other places. I don't even pull up their charts. I think they're kind of known for that. But yeah, they have pretty good prices. But I'm not giving any recommendations, so just ignore that. Yeah, Don, you're not looking to get any education, right? You've already been through it, haven't you? I assume. I'm not sure I really know you, but I think you've been around a while. But there are just, some places out there that are takeoffs from stuff I've written that are redone by ex-students of mine, and that's great. Everybody can go out and do that, but that's what the case isn't sometimes. All right, anything else, guys? I'm going to make a last call for questions. I'll gladly sit here if you want a little bit longer, but I'm going to make a last call for questions. And for some of you, I'll see you, if you come to a trial in the room, I'll see you in the room, or I'll see you at that Friday free webinar if you're going to attend that. Okay. All right. Boom, boom, boom. Thank you. Done. All right, guys. Have a great evening, everybody. I'll see you when I see you next. Take care.